All right, so I want to welcome you guys. We are doing a pre-recorded video today because I'm here with my friend and financial advisor extraordinaire, Walter Bouchard with Bouchard and Associates. He's in Fredericksburg. And we are pre-recording because the financial industry has so many regulations and it's for compliance issues because, in case Walter slips up and, I'm kidding. No,
Careful.
it's I'm kidding. So it really is for compliance issues. But this is I wanted to talk with Walter because he is just very level-headed. He's just very reassuring when it comes to financial matters. And Walter, I don't know about you, but I've been seeing a lot of things like, oh, the economy is never going to recover, and this is forever devastating. And so that kind of stuff is scary for people.
hmm hmm
And so I wanted to really be able to have that conversation with you, and maybe we could address some of that and ease some of those fears.
Yeah, that's a great place to start. One of the seminars we've done in the past actually has covers from different magazines in the past, and they would say things like the stock market has crashed, it's never going to recover right before it went on to reach new highs, or the sky's the limit, it's never going to fall right before it crashed. So great time to talk about this, and that's one of the things that we chatted about before is paying attention to the facts and not the headlines. The headlines are
Yes,
really scary right now.
they are very scary. And this is my public service announcement. The news, the whole point of the news is for ratings. And their commodity is fear, because fear jacks up ratings. And it does all kinds of, I could go on forever on what it does for us internally, but the news is not a public service. It's a business, and its commodity is fear. So, and it is certainly generating that around finances and around the economy. So
Absolutely.
I am so glad that you're here. So what would you like to share so that people can, like I was telling you earlier, if people can just kind of calm the hell down. It's scary for a lot of people. And I know for some people things are very tight if they're not working. So I don't want to
Mhm.
diminish that in any way, but I want to just it's not everything is doom and gloom, and I want people to be able to think about what they can do and what is possible, and really what are the facts, like you were saying, the facts and not the fear.
Yeah, that's a great way to look at it. One of the things I love about the work that I've seen you do before is it's about empowerment. That when
Yes.
we're faced with situations, we can either feel like the victim and succumb to that, or we can step into it, embrace the situation, and kind of move forward. And that's really the big part of things right now. You talk about staying calm, and you talk about how the media drives fear. People, I think, have lost sight of that. I think they believe that the media's purpose is to inform us. So when I've done public speaking events in the past, one of the things I'll ask people is, what's the purpose of the media? And a lot of people say, well, to inform us, to give us news. No, it's to make money. And they
Yes.
make money, like you said, by stimulating that fear, and then they hit us with their advertising. And that gets kind of translated also over things like social media. So Facebook and other social media have these algorithms where they present certain stories according to other stories that you've researched. They present certain ads according to certain stories you read. They literally can tell how long you paused on things or what you clicked on. And that's scary because it's really being fabricated to us for us. And again, really to multiply that fear. So, back to what we talked about, realize that there's bits of information that are useful, but most of it is theory and to some degree propaganda, presenting a perspective that they want to persuade us to believe in.
Yes. Yes. And the more fearful we are, the more reactive we are.
Mhm.
And as much as I'm sure I think it's Infinity car manufacturer, if you drive an Infinity, you have peace of mind. So, they get you all scared, and then just drive this car and you'll have peace of mind.
Mhm.
So, oh, go ahead.
I was going to say it's scary how much they research psychology
Oh my goodness,
to
yes.
understand how to influence our buying decisions. And when you really kind of go behind the curtain of some of these things, it's amazing how quickly and how far that study has advanced in a relatively short period of time. And again, now translated over these different mediums, it really just kind of multiplies. And then it gets people talking about it. So if this person's scared, they talk to that person, and that person starts to wonder that confirmation bias. They start to wonder, well, if they're scared, should I be scared? If I'm not
Right.
scared, but they are, well, I trust them, I like them, should I be scared? And again, it just kind of dominoes from there. But yeah,
Right.
really remaining calm, because, and we talk about the markets in our discussion, the markets capitalize somewhat on that as well, because if people sell at the wrong price, other people buy it at that price, it goes up, and then they're willing to sell it back later at higher prices. It's kind of the concept of some of our systems. So it does play into the whole economic side of things as well.
So I would love, if you can share your perspective on how the market responds to what's going on. Um, y- so how it responds to global events and how it responds to heightened fears and reactivity.
Well, the markets are really trying to anticipate the general direction of economic conditions, whether it's domestically or globally. So if the investors believe that things are getting better and improving, they're going to tend to buy in anticipation of better days coming. If they feel that things are going to turn sour, they tend to sell to get out at higher prices before things fall. There are actually analysts and investors right now that have algorithms that go out and they crawl through the internet looking at headlines and information, and they make buying and selling decisions based on the chatter. So we're seeing a
Wow.
lot more reactivity now to things like headlines, because they realize the influence that that has on people. And what we've seen over the years is a big shift in investors. You think back to when we were young. Now, I know that was just a few years ago,
Yeah.
but a lot of the money in the market was controlled by large institutional investors, pension funds, and big money managers, and that sort of thing. And over the years, we've seen that shift over to more and more Main Street folks. Defined benefit plans, pension plans have all but gone away,
Yeah.
and they've been replaced with these defined contribution plans like 401ks and IRAs, where we're encouraged to save and invest for ourselves. The challenge with that is when sophisticated investors were handling it, they were less prone to be reactive to the news. Mr. and Mrs. Main Street is much more influenced and impacted by the news. One of the analysts that I follow actually has two charts that they follow, and don't blame me for what he calls them, but he calls it smart money and dumb money. And smart money are those large investors, institutions, hedge funds, those kind of things. And dumb money are Mr. and Mrs. Main Street. Now, again, don't blame me. It's not my terms. But what they watch is the pattern of buying and selling, and they try to understand the direction of the market based on those two dynamics, because they're often disconnected in who's buying and who's selling, often opposite. And again, that's part of that reactivity to the news. Mr. and Mrs. Main Street are much more impacted right away, and they'll make decisions based on the headlines, and they won't so much work through, well, what are the economic facts of that company or of the economy as a whole, and break it down from a more analytical, unemotional, logical perspective.
And I would also imagine a more long-term view instead of an immediate right now view.
Yeah. We always are taught you want to think long term with your investing. Okay.
Right.
And more and more we talk to investors, we hear that they know they should be invested for the long term. They know they should be thinking about the long term, yet all too often they react to the short term. Now, I know you have, but if you've ever taught somebody to drive, you see the difference between an experienced driver and a newbie.
Yes.
A newbie is reacting to everything. Okay. Same sort of thing with this. If we're thinking long term investing, It doesn't mean we don't look at the short term. It doesn't mean we don't make changes based on what we're seeing. But again, it's a different perspective when you're thinking about that longer game. And that plays into some things we should talk about today than reacting to whatever's going on. That's that smart money, dumb money concept. Because if we react, we're probably not making the right decision. And that's really where people get separated from the money. We all know things like buy low, sell high. But statistics prove out that too many people buy high and sell low. When the market's at record high levels and the media is saying things are great, everybody should be investing, people do. When some of the investment news talks about, well, this was the best stock or this was the best mutual fund, people flock to that. Well, just because it was the best last year doesn't
Does
mean it'll be the best next year. And that's
yes.
again that short-term thinking. So we get diluted into um, reacting short-term when we really should be thinking long-term. But back to the car analogy, if you think about driving your car, just because you're driving to a destination doesn't mean you don't need to adjust to those short-term decisions. Same sort of thing with your investment strategy. Be thinking long-term, and how do the moves that I'm making today move me closer to that goal instead of moving me away from it? That doesn't mean don't shift. We can talk about that a bit. But again, be thinking more about the whole game, not just what's at right in front of us.
Well, and I love the car analogy because I'm thinking, you know, again, you can shift if something happens. An
Mhm.
experienced driver is going to adjust, and an inexperienced driver is going to go, "Oh my god!" and they're going to react, and they're going to freak out,
Absolutely.
and then it could be disastrous. Um,
Absolutely.
so I would imagine the same is true of investing. You can make those shifts. So you might go, from higher risk to lower risk. So you
hmm
can make the shifts, but you're not going to freak out.
Yeah. And we're actually in a good place right now for folks to reconsider their risk exposures and tolerance levels. We use some very sophisticated tools to understand people's risk tolerance. Now, it's very sophisticated in the engine behind the software, but it's very user friendly on the front side of it. So it takes a lot of the guesswork out of it. And when I'm working with clients and prospects using this tool, it gives us a lot of insight. It doesn't necessarily answer the question. A lot of people think, and even some advisors think, if I answer these questions, get this score, that's where I should be. I've been doing this for 25 years now, which kind of scares me to admit, but makes me feel old. But in my experience with people is a lot of times they think their risk tolerance is at a certain level
But it's not.
until it's tested. So this
Right.
software actually helps to drive the conversation so that we can get real about it. So I love to blend two things, what we call financial sense, which is mathematics and things we can calculate and analyze, with people sense, which is really how people behave, why they do or don't do things. And when you merge those two, art and science together, behavior and science together, it really gives us a much better outlook and understanding. And that's part of why our clients have had very good experience coming through this. When you're looking at things in a worst case scenario, battle testing it before the battle starts, you kind of come into a period like this and we can have that conversation of, remember when we talked about this
Yes.
could happen. Whereas what a lot of people focus on is the great stuff and they want the great returns. But then when the battle test comes, they get scared, they get faint of heart, they back away because, like you said, the economy is never going to recover. Now, do you mind if we touch on that for just a second?
Please. That would be fantastic.
You think about all the times things have happened and they told us things like that.
Yes.
Somewhere around here, I've got a list of all the things that were supposed to kill us all before, right? We've
Right.
got SARS and MERS and MRSA and Ebola and 9/11, all these things. Now, that's not trivializing or minimizing those things at all. There was a lot of tragedy buried into each of those events, but the media made us believe the end was at hand,
Yes.
and it wasn't. And none of us remember the Y2K thing, right?
That was no, huh?
What a big farce that ended up being. Now, the hard part about some of this stuff is if we don't pay attention to it, I mean, it could be. So even the current pandemic that we're experiencing, yeah, this could be a lot worse than it seems like it's going to be, right? Now, these numbers aren't good, but they're not as horrific as they were projected. So I saw one piece of research out of a university in Australia that was saying 12 million dead before this was over. And that just boggles my mind. We're not seeing anywhere close to those numbers unless something goes really terribly wrong from here. But again, those drive that fear that we talked about before. So we've been through really bad economic situations before, and we come through. And there's a few reasons why we come through. And I think part of it, I'm going to kind of wave the flag for just a second. We as a country have a very strong constitution. And I don't mean the paper, I mean who we are as a people and how we look at things. Sometimes we don't get up and move forward until we've gotten knocked down. Hate to
Right.
say that. This time that we're seeing right now has been great because you see people helping people.
Yes.
That's awesome. After 9/11, you saw New Yorkers helping people. That kind
Yes.
of stuff is great. It's a shame that it comes to a tragedy to get us in that frame of mind. But again, that speaks to who we are as a people, kind of our culture. So we've been through horrible experiences before. And if you really think about what's going on this situation, this downturn in the market wasn't driven by economic problems, right? And that's where we talked about the markets trying to anticipate ahead of time. So what we saw was this pandemic building. At first, it was a virus, and then it started to amp up. And I don't know all the stages of that, but again, then it became this full widespread thing. So the markets got reactive to that. They were anticipating that this is going to get pretty ugly as far as the economic impact, the shutdowns, because that's where they start tuning into say, what are the political players doing in these situations and how will that affect things?
Hmm.
So we've been through these situations before, and each time we're able to come back. There's a couple things that make this one very different. And the first part of that is the fact that the economy was so strong and healthy before this happened.
Hmm.
Without discussing politics, because I know how charged that can get, it the economy was healthy before this started. As we look at analysts, I follow a number of different analysts because I like to get very different perspectives. I don't like to drink anybody's Kool-Aid, but what we were saying was the analysts were saying that things were either really good or good moving to really good. Some of the signals and things that we look for in the economic underpinnings of the markets were starting to go from yellow to green or red to yellow. And that was a very positive shift. We all knew that recession was brewing out there at some point. The question was when and how bad and how long. But again, the economy was healthy and strong before this hit. So if we liken the the market flu to the body and a flu, if the body's healthy and strong before it hits, chances are if you do get it, you're going to shake it off relatively quickly and completely. So the economy was healthy and strong before this came in. And then the backstop to this is the government's action in this has been very strong. Ben Bernanke kind of spoke to that when he was talking about the current crisis and how it's different from some of the ones in the past. Our government has stepped in and said they're willing to do whatever it takes. And we've seen that with two big stimulus packages. Now, some people are calling it bailouts. I like to separate those terms, stimulus from bailout, because bailout is really when somebody did something wrong. They make bad choices. Like we go back to 2007 and 8. Oh, so you're breathing, you qualify for a mortgage. Okay.
Right. Right.
Stated income loans for people that are self-employed. You didn't need to prove it. You just needed to say it so the loan officer could write it down. That was bailout because people made bad choices. Companies made
Yes.
bad choices. That's a bailout. That's different from a stimulus. None of us expected this to happen. And when it did, none of us expected it to be so bad so quickly and have this huge sweeping impact on us. So when we look at that, the government's willingness to do whatever it takes is also a very good positive thing. When we go back to previous periods like 2007 and 8, when that other situation hit, the economy and the markets looked very good prior to that, but there was nothing supporting it. So as soon as they had pressure, things kind of crumbled and collapsed. And it took a long time to come back from that, years, because the backing, the banking system, the mortgage industry, the housing industry, all were such in shambles that took a long time. And the government was very measured in their steps. They didn't step in hard. They stepped in very measured. We're going to save this company, but we'll let this company fail. We're going to put this money on the table, but we're going to hold back with more and see what happens. This time they pushed in hard and fast, and the stimulus kind of went through all levels of our economy and our social systems, from folks, Mr. and Mrs. Main Street, getting stimulus checks, to extension of unemployment benefits in some of these programs, and the Paycheck Protection Program for small businesses, right through big stimulus checks for big corporations. And I know that there's a lot of discussion around how the package was put together and some things that got through in it and that kind of stuff. But at the end of the day, it was a huge step, and it showed the government's willingness to step into this. That's powerful. They haven't done that before.
So, what do you think that translates to in terms of? And I know you don't have a crystal ball, and I know, but starting out, with a healthy economy, and then all of this support. Do you think that translates into we'll never turn it back around, or the economy will never recover, or that it will recover? It will recover. Like
It's
we're
going to recover. Okay. And again, I'm cautious is how I say that, because again, we've got to be within certain guidelines, but it will recover, and it will recover because our system is strong. Okay. The biggest thing that we have going for us is we are a strong consumer base. We love our stuff, whether it's gadgets like we're talking on now, or Yeti water bottles, or whatever it is. We love our stuff. We're consumers. And that really drives our economy. We like to spend. There's groups of people out there that are still spending. There's certain stores that are really cranking up their revenues because they're open, and you literally have a waiting line to get in.
right.
From a business management perspective or a business owner perspective, that's great. Hate to say that's good news, but when you got people lined up to get into your business, that's good. And then you've got other businesses that are closed. But the bottom line is, some of those, most of those, will either reopen or somebody will open in their place. That's
Right.
the thing. When we're going through a trough like this, everybody says, oh, it's over. People are never going to go out to eat again. If they open restaurants today,
Oh.
yeah, most of them would be packed. People are saying,
Yes.
oh, people are going to be slow to go back out. People haven't stopped gathering. And that's scary when we talk about the virus side of it. But perhaps that plays into herd immunity and things. That gets us into the science stuff I don't even
Yeah,
want to
yeah.
think about or know. But when we look at, will it recover? Yeah. Now, how quickly becomes the question, and are we well on the road to that? The hard part about those things is crystal ball. You don't
Right.
know until you've passed a certain point and you can look back and say, okay, now we feel that we've recovered and are in a better stead. But we talk about the markets. When we look at the levels that we're currently at, if you and I in a public forum would talk about these levels, which are quite a fall from the previous highs, we were to talk about these levels, people would have thought we were crazy. I can remember when people said the Dow would never break 10,000.
Right.
So we will recover. The question is how quickly. Now, again, back to the economy is so healthy and strong before this hit. It's going to take us a while to get back to those stellar numbers. Unemployment was phenomenal. Interest rates were low. Productivity were good and solid. All those things were very, very good. It'll take us a while to get back to there, but it's not going to take us long to get out of this extreme bad zone. So unemployment's a great way to look at it. there are a lot of people through this region, and I know this is not going to be just shown in our region, but there's a lot of people through this year region that have been completely unaffected
Right.
economically. They're still working.
Right.
I know people that are at home not working but getting their full pay
Yes.
because of the way this is structured. So we see that. Then we see other folks that have seen some cutbacks, and then we see other folks that have lost their income entirely. And it's not just those folks that are, for instance, servers and retail clerks, it's also some high level health care professionals that, again, if their part of the hospital isn't busy, they get laid off.
Right.
So we're seeing that impact, but most of that's going to come right back. So talk about the servers. If they open the restaurant tomorrow, people are going to flock in. They're going to need servers. Those servers are going right back to work.
Right.
Okay.
Right.
The healthcare professionals, if people are coming in and getting their surgeries done and whatnot, those folks are going right back to work. Again, it might not be the same job, but it'll be a job. It might not be the same money. It might be more, might be less. That's the nature of turnover in an economy. But yeah, things are going to come back, and the really horrible numbers for unemployment and whatnot, they're going to come down very quickly. Some other things, it's going to take a while.
Well, and so one of the things that I think is important to keep in mind when it comes to the economy is that um, the economy is constantly, like, I think of it, it's not really, but like a living entity, and it's never constantly the same. It is always adjusting. And so, to think that we're going to have a good, strong economy forever and ever and ever, amen, it's just not realistic.
Mm-mm.
It's constantly adjusting. So it is how we handle the adjustments. And the better we handle the adjustments, and if I'm speaking nonsense, you tell me, but it seems to me, because the market is reactive, the better that we individually and collectively handle the adjustments, the the better that is for the market, and the more easily it will come back. Is that?
Yeah, I think that's very, very legitimate. Again, that goes back to what we talked about earlier about staying calm, keeping your wits
Yes.
about you. Okay.
Yes.
The stock market is a very rough game. And again, it will separate you from your money if you do the wrong things, if you make the wrong choices at the wrong time. Again, it will. It can also make you a lot of money if you make the right choices at the right time, and it can make you good money if you make good choices most of the time. Okay, and that's really the key. So yeah, that I like the kind of living perspective for the economy. It does. It goes through these cycles. Now, you might notice that the media doesn't really talk about it when everything's great and rosy.
Right.
They only talk about it when it's bad. And one of the things that I've kind of tuned into is how the media reports things. If the market goes down, the market slid today, 100 points. And I'm thinking, that's not a slide.
Right.
It's not even really a stub toe at these levels. Okay. But the media, and you hear the anxiety invoking tone that they use. And it does. It stimulates that. And then you want to tune in. And they've gotten really good at doing that, getting us to tune in to find out how bad it is so they can hit us with their commercials.
Right.
Yeah.
Right.
Not to pick too much on the media, but the other thing is what amazes me is they always have an answer. Always have an answer right away. We follow some really brilliant economists and analysts and that sort of thing. It sometimes takes these people at least hours, days, or weeks to figure out why things are going on, sometimes even months, quarters, and years before they can really speak to what happened. But the media has an answer right away.
Well, it's that instant gratification that, a lot of us desire. We want an answer now.
Mm-hmm.
And we want our fears soothed now. And
Mm-hmm.
so that whole generate fear, and we're going to give you an answer to soothe it, is that whole, it's there's a psychology behind it.
Mm-hmm. Exactly.
Yeah.
Yeah. Yeah.
So one of the things I think is really important, and you said it earlier, is that opportunity. So I think and I've talked with a lot of my guests that I've talked to recently about the opportunity present. So, I mean, there's an opportunity for personal growth. There's an opportunity to evaluate things. There's an opportunity in business. There's a financial opportunity. So, what are some of the opportunities you see for people financially, and things they can begin to focus on? Because I'm all about empowerment.
Mhm.
What are things that they can do instead of looking at the fear or feeling the fear? What can they do to kind of take charge of their finances?
Great way to kind of talk about that. So, if I can, I'd like to break it into almost two parts. One is the opportunity to really reevaluate some things. What's really important? Now, do you know anybody that maybe spends too much money going out to eat?
Yeah. Oh.
I do, right? Again, I can think about when I was a kid, if we went out to eat once or twice a year, it was a big deal. Now, if I don't take my kids out twice a day, they think we're broke. Okay. So, a great time to reevaluate what's important to you. Now, this is whether you're fully employed right now and engaged, full income, or whether you're not, because a lot of us have more free time right now because we have less distraction time. So we're
Yes.
forced to be at home where we could be out at the movies or sports or whatever. So again, great time to reevaluate what's important to you. Okay. And within that, taking a hard look at where your money's going. Sometimes I
Yes.
liken it to scraping barnacles off the boat. A major ship, a commercial ship, periodically has to put that ship in for service to scrape the barnacles off because the drag of efficiency or drag on efficiency that those barnacles create really affects the profitability of that commercial ship. Well, same sort of thing with our budgets. We accumulate barnacles, subscriptions to things we don't do or read anymore, right? Multiple subscriptions to the same kind of services. People have Netflix and several others. Um, TV channels, a gazillion channels that you don't watch. You watch a handful. So again, really looking at those barnacles and seeing, are there things that we can scrape off and do away with, and really direct our money towards what's most important to us. Money's a tool, it's a resource. And if we use that resource effectively, we can first step back from the stress and anxiety of it because it's a tool, not a weapon, and it can be leveraged to accomplish the things that are most important to us, taking care of ourselves and those that we care about. So great opportunity to reevaluate that. Look at your budget, go through your budget and look at what are your committed expenses, what are your discretionary expenses, what are your irregular expenses. Again, really paying attention to, is your money going where you want it to? And if not, now's a great time to reevaluate it. Back
Can
to
I
the Go
can I
ahead.
say something about that?
Mhm,
So, a while ago, Brian and I went through a really, really financially tough time.
mhm,
And so we cut out so much stuff. Like I got out of the habit of shopping. I was never a huge shopper, but I got out of the habit of just going out shopping.
mhm,
And it really looked at what we needed. And I was shocked at how very little we actually need,
mhm,
and how very little I we actually need to buy. And so, and I call it a habit. I never got back into that habit as things eased up. I never got back into that habit.
mhm,
And even still, if I want to buy something, like I go through a whole process of, why do I want it? Because most of the time, because we are a consumer driven society, I think a lot of us buy to feel better, for that instant gratification, because we think it's going to create a feeling that we want that we don't have. There are lots of reasons why we buy. So really evaluating why um,
mhm,
is important. And I think this is a great opportunity to see that we don't need necessarily all the distractions that we have built in to our
mhm,
lives. And if we actually just take this time to become comfortable with ourselves and our family,
mhm.
we don't necessarily need to add those back in. And then I would say, if I were a financial advisor, which I is makes me laugh to think about, um, is then you have, if you start doing that, then you have the money to save or to invest. Like you
Mhm.
said, you get to see where you want to direct your money. But when you I call it redirecting spending. When people say, "I don't have the money for that." I bet you if you really evaluated, you would be shocked at how much money you could save if you quit
Exactly.
your, 3 a day Starbucks run.
See, it's easy for me to pick on Starbucks because I don't drink coffee. So I call it $4. I mean, because you spend $4 to $7 on a cup of coffee you drink half of. No, but you're right on track with that. Really looking at what's important. I use a tool in my office all the time, and I ask people, every dollar you spend costs you what? And people think, wow, $1.25 or whatever. But it really comes down to a simple thing: costs you
Time.
time, because you have to trade in your time to earn a dollar to put it in your pocket to then spend it. So you want to think about it, because you can get dollars back, but you can't get time back.
Right.
So think about, where are you spending those dollars, because that represents time invested. Make sure it's worth and worthy of the time you're putting into it. So that's why I can pick on Starbucks, because I don't like coffee. But when you're throwing that stuff away, again, you're throwing away part of your life. You can't get that back. So yeah,
Right.
I like the fact that you not only adjusted to get through that period, and now is a good time to do it. If there has been some compromise to your income, it's necessary. Absolutely. Cut out all the extras. Just cut
Yes.
down to the basic core stuff. And there's programs in place from the stimulus package that help some of that. There's, again, delays on foreclosures and evictions. Now, a lot of these things have twists to them. So again, you've got to get the resources. You got to check the details. Devil's in the detail kind of concepts. But again, if you have to cut back and you're really stretched because of some compromised income, there are a lot of programs that are out there for you. You just got to get the information. If there's any questions, you can call us. You can shoot us an email. I'll shoot you out a resource sheet, no strings attached. And again, because we want people to have the information to be able to make good decisions through this period. Again,
Yeah.
a lot of the resources are just right there, but people don't know that they're there. So, but the other thing that you talked about is that became a change that you've taken forward.
Yes.
That's an important part of that. So now is a great time to make some changes that are going to carry forward. So if you're looking at things and you were focused on the wrong things, like, blowing money, saying I've got 1,000 channels for my cable TV, but again, then you can move forward saying, okay, I'm spending the money I want to spend, and it's spending it for the things that are important to me, and make
Well,
that a lifetime sustainable thing.
yes, and I will say, because I used to talk a lot about money mindset, but one of the thing I remember when you and I first started to talk, and it was save 10. And to me at that time when things were so tight, I was like, there is, and I can't possibly cut anything else out. But even just what I would say is 10% is a lot, but even if you're saving $5 a week, there is something psychological about knowing that you are saving money, and it's
Hmm.
it's money that you don't touch, like you
Hmm.
don't draw from it, but there's something about that, and as you watch that build, it flips something for you on mentally and psychologically, and it makes it easier to get in that habit of saving.
Hmm.
And then as things shift and you can save more, you save more.
Exactly. And I've worked a lot with folks over the years, whether they're really high earners or even low earners, who didn't have any cash reserve. And the
Yes.
stress and anxiety, we've heard so much talk about most Americans are one paycheck away from bankruptcy. And there's a reality to that, because, again, we haven't been carrying the cash reserves that we should. And that creates anxiety. And like you said, even if it's $5 or $10 or $25, again, 10% is a great mark, and I highly encourage that or more, but we got to start somewhere. And that's the key: start somewhere. So if it's $5, and then set a goal or target. I prefer target over goal, but set a target that in a month or 2 months or 3 months, I'm going to increase that to $10. And then set another marker for another increase. Do it incrementally. That way you kind of stretch. I joke with people, if I wanted to run a marathon, I couldn't do it tomorrow. I don't know that I could ever do it, to be honest.
I
I don't know if I
couldn't.
want to, but I know I couldn't go out there and run, that far without killing myself, or probably killing myself. But if I worked up to it and built up, and we see so many things like that, that if you build in gradually and train towards something, you can get there. Same sort of thing with your saving and cash reserves. And that's another important part of this. Having a cash reserve gives you a comfort. Now, the rule of
Yes.
thumb on that is 3 to 6 months worth of your expenses. People say, why do I need that much? I don't know. Maybe a pandemic comes around and good to have. Now, I'd rather have it, not need it, than need it, and not have it. Now, we don't
Correct.
want too much money in cash reserve, because that money doesn't really work hard enough for us towards our long range goals. But we do want some. Think about it as a lifeboat or a life raft. We don't need a life yacht, and we definitely don't want a stick or a twig. Adequate. Now, I prefer 3 to 6 months worth of your expenses instead of your income. A lot of advisors say income, so why the difference? Because if something happens to interrupt your income, you don't need to replace your income, you just need to meet your outgoing.
Right.
Now, if your income and your outgoing are the same, we got a different discussion we need to have. But again, you just need to meet your outgoing. So 3 to 6 months worth of that in reserve, in case of situations like this, whether it's a layoff, a disability, death of a spouse or loved one, pandemics, furloughs, I mean, all these things. And I preach so much to people about things like cash reserves, and a lot of times they can think I'm just crying wolf. It wasn't because I expected this kind of thing to happen, but it's because this kind of thing can happen. So we want to have those cash reserves. And again, you spoke perfectly about it when you said it kind of gives you that peace of mind. You know that you've got it, and it feels good. And I've watched folks start with nothing and build up a few hundred at a time, sometimes get a setback and then a little bit further. The key is keep doing it, keep moving forward, and then it starts to snowball in a positive way. So
Yes.
great point about the cash reserves and saving.
Well, thank you. Thank you. Thank you.
So you could be a financial planner.
No, nobody wants that. Let me tell you, nobody wants that.
Yeah.
So, do you have anything else that you would like to share in terms of that would help people focus on what they can do, and it yeah, what they can do to feel like when they start to fall into the fear of the sky is falling?
Again, it really comes down to what we talked about early on about paying attention to the facts and not the headlines. Okay.
Can you say a little bit more about that?
Yeah, go and do some research. Now, just because the internet says doesn't mean it is, but go and do your own independent research. Facebook has become the source of news for so many people. And I'm not going to pick on Facebook, because then they'll shut down all of our accounts. But again, it's not necessarily news, it's information. And one of the things that I have a regular opportunity to do is I have clients and friends that are far left and clients and friends that are far right. So I hear a lot of conspiracy stuff from both sides. And sometimes they'll point me to sources. And when I go and I see that the only source of that information is some sort of write up that somebody did and posted on a website, so it looks
Right.
really official, but there's no source, or all the information points back to a source. That's where it really gets crazy. So really do your research. Now, who do you trust? That's the hard part right now. But again, I'm going to tend to trust when I see multiple respectable institutions that are posting things, government agencies and research facilities and universities. Again, you got to blend it out and get conflicting perspectives, but look at both sides of the argument to be able to make decisions, and really kind of, again, look for the facts, not the headlines. And then it goes back to the second part of the opportunities right now is look for those opportunities, because the economy will recover from this. So if you're in a position and you have some investable money, some money that you're not going to need, now don't take your cash reserves down to a low level, because we don't know when this is going to wrap up. This reopening experiment we're in the midst of could go really well or could go horribly wrong. There's people on both sides that are very well respected that say both ends of that. But again, the economy will recover. And if we are able to buy good stuff on sale or on clearance, now's not a bad time to look for those opportunities. Be careful where you go. Be careful about the flash in the pan and the guarantees and all these things that people love to tout in some of these websites. Because again, if it were that simple, everybody'd be making money and it wouldn't be big money. So
Right.
really look for those opportunities to buy good stuff on sale and on clearance because it's out there. There's certain companies that will absolutely fail through this process. We've already seen some closures. Now, the hard part that we don't know about that, again, back to beyond the headlines, some of those companies were this far from bankruptcy before this happened.
Right.
The media says, oh my God, it's Corona. No, not necessarily at all. Now, did Corona help? No, it's not helping anything right now, except for maybe the alcohol industry. But all joking aside, that's one of the things they're talking about. People's drinking rates have gone way up.
Yeah.
Yeah. But
Because
when we
it's the
look at,
only distraction they can really Netflix and drinking is the only
no,
distraction.
it's not. Come on, we're supposed to help people move in a positive direction with this.
Well, I no, no, not a healthy distraction, but yes, that's what people are
Exactly.
leaning on.
And all joking aside, if we did fall into that, then now's the time, great time to say, okay, I had my fun.
Right.
Now let's get back to healthier pursuits with that because now is a
Yes.
good time to read those books and take those walks because it's exercise, right? Just don't be around a bunch of people, but get out there, spend some time meditating, doing yoga, things that are good, healthy things, because so many of these things are available right in our households through the internet. So,
Right.
but back to the opportunities from an economic or market perspective, there are good things out there. You're going to have to be patient. We could see more fall off, maybe even a test of a new bottom before we start to see the lasting recovery, or we could continue to push up from here. Anybody's guessed, really two schools of thought on that or two camps, but the bottom line is we're not going to know until it's in the history books. But
Right.
if you're keeping that long-term perspective and you get in it and you stay with it, because we know where the market was before, and based on previous periods where it was never going to recover, and it always did, and then reached new heights, I feel comfortable saying, again, this one will do it the same way. Okay. So, again, for the foreseeable future of our economy, at some point, does that come to question? All things come to question. But again, for the foreseeable future, we should see some recovery. Questions when. So, there are a lot of good opportunities. So do your research and do real research, not just what somebody's buzzing about. And then dig in, talk to financial professionals, talk to people that, again, really have the information to help you make good decisions, some of which is what to invest in, a lot of which is whether to invest now or not based on your
Mhm.
situation. So really kind of seize those opportunities. And again, use this as an opportunity to move forward.
I
We're all, go ahead.
No, go ahead.
I was going to say, we're all kind of taking a pause right now.
Yeah.
Some folks are taking a step back, but the key is not what happens to us, it's how we handle it. Then,
Yes.
do we play the victim, even if we've had things happen to us, or do we say, now's the time to move forward? So, even those folks that have been displaced, now might be the time to start that business that you've always dreamt of.
Yes.
Go back to
Yes.
school and learn a new career path for yourself. I mean,
Yes. Yeah.
yeah,
Oh, or change industries or it's
exactly.
I say this often, but the law of polarity says that something can exist without its opposite also existing at the same time.
Mhm.
So you cannot have a tragedy or an unfortunate circumstance without opportunity also existing at the same time.
Mhm.
So this it's just where you put your focus.
Yeah, that's your attitude because that's what you can control, right?
Exactly.
Yeah. A friend
Exactly.
of mine and highly respected coach talks about AFGOs, another effing growth opportunity. You can use whatever F word you want, flipping or whatever. But again, that's a way to look at this. We can push forward if we choose to.
Yes. Yes. Yay. Well, I really appreciate it. I appreciate you taking the time to talk. And I do wish this were live so people could ask questions. And I know that you need to read a disclaimer.
I do. and I'll try to do it in my best Hollywood voice.
Excellent.
Please remember that nothing we discuss here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 540-368-9287. I'd be happy to talk with you. All joking aside, you can give us a call or somebody else that you trust and respect. While we believe the information in this video is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. I'm with Bouchard and Associates at 904 Princess Anne Street, Suite 101 in Fredericksburg, 22401. Securities and advisory services are offered through Commonwealth Financial Network, a member of FINRA and SIPC, a registered investment advisor. Remember, investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. Any indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. And with that, I thank you for your time today. I appreciate being part of the conversation.
Thank you so very much for sharing your knowledge and your expertise and your humor.
Thank you, Melanie. Bye.
All right.